Good morning, everyone. I think there's some mistakes, there's some error from our side. So I'll just start the meeting from once again, from the start. So the topic for today is mutual funds versus PMS and understanding their difference. So as you all know, both are investment vehicles actually. So like people generally who wants to invest wants returns over a period of time. So accordingly to their own goals, their investment amount, and the level of risk they are willing to take, they can choose the right apt investment product they want to invest. So be it a mutual fund or a PMS, doing your own due diligence is what which matters the most, because at the end of the day, be it in a mutual fund or PMS, there is actually a professional fund manager who is going to take care of your money. So choosing the right fund and choosing the right fund manager and staying invested and trusting him and being patient and traveling with him for a period of time is what which actually matters the most. So now, like generally, and also as you all know, when in life, when you don't just directly start riding a motorcycle, you actually start riding your bicycle, and then slowly you try to learn riding your bike. It's just like that. So mutual fund is like riding uh, a bicycle. So your it would be better if you start your investment experience with a mutual fund, because like you can start slowly and very small, and you can accumulate and you can scale up, and then once you're ready to take the next big step, maybe you can switch to PMS. So now let's just discuss what we can just see in detail what PMS and what mutual funds, and what their disadvantages and advantages, and what would be suitable for which kind of investors in this webinar. So what is a mutual fund? So as you all know, like mutual funds are kind of a ready-made portfolio. So these portfolio has a basket of stocks, and these stocks are researched and picked by the fund managers. So the fund managers have their own research and strategy team who will be doing all the stock selection works. So these mutual funds can not only invest in equities, they can also invest in bonds, precious metals, and so on. So the main thing is, in the mutual fund, all of the investors' money are pooled, and at that and what particular period of time the investor gets in that kind of a price. So each and every mutual fund has an NAV, and that NAV is allotted, and units are allotted. So, so one major thing is all of the mutual fund investors staying invested in a mutual fund have the same portfolio, meaning they have the same set of stocks with the same weightage and everything. So even when they're planning to stay invested in a fund for a 3 to 5 year period, so all the portfolio changes will be the same for all the investors who are staying in that fund. So mutual fund would be ideally suitable for beginners who are starting their investment journey in equities, who who have been investing all these years in traditional finance investment products like FDs, real estate, and so on. So what is a PMS? PMS is a portfolio management service. So just like a mutual fund house, AMC companies, like these AMC, there are AMC companies who have PMS. So they have PMS funds. So the main thing is In PMS, there is actually a minimum capital requirement which is laid by SEBI. And to start off with, you need a 50 lakh base ticket size to start your investment. So here, like the main thing is there will be a separate demat account created for you, the client, with your address proofs and everything in your name. But the only thing is at the starting itself, there will be, the client and the PMS firm will be entering into a power of attorney contract saying that the demat, the 50 lakhs capital and everything is actually the client's, but he will be transferring the rights to the PMS company so that they can take the best decision on his best interest. So at the closing of the PMS, actually the power of attorney will be cancelled, and the investor have two options. One is they can just close the demat account, and they can, the PMS company can sell all this the client's shares, and they can directly credit the capital in the bank's in the client's bank account. Or what they can do is the client can actually just take the demat account, and maybe from there on, like they can even manage that portfolio by themselves. So two options are available. And like mostly this would be suitable for players who have been investing in mutual funds for a very long period of time, who wants to, you know uh, they would have recently got some big amount of capital, and that capital, if they would like to go with the professional advice, they can seek. And mostly it's suitable for HNA and seasoned investors. So now let's just look at the key differences. So one is, as I said, like in mutual funds, if you're going to buy, so like it will be allotted in units. So as I said, every mutual fund has NAV, and your overall amount would be divided by NAV, and units should be allotted based on it. So PMS, once you start at 50 lakhs, it's like a direct ownership. So minimum investment, it's actually a mistake. So even you can start with 100 rupee, 500 rupee SIP lump sums. But here in PMS, minimum of 50 lakhs is required. And also the customization. So customization is like in mutual funds, as I was saying, there would be all of the investors in a particular fund will be having the same portfolio. Whereas even let's say if there is a specific multi-cap fund, and there are around 1,000 investors in that fund, like people, let's say that fund actually started in 2019, and today it's 2025, and 1,000 people are traveling. The people who have onboarded in 2019 would actually be having a different set of stocks when compared to people who have onboarded in 2023 or 2024. Because even though they're staying invested in the same multi-cap PMS fund, like there would be, in 2019, there would be a different set of stocks which would be cheaper, which would have been trading at a much attractive valuation. Whereas, those stocks would have, performed well, and they might be in a, not at a very attractive valuation. So they can't take exposure to those stocks at that period of time. So, like I was saying, this is the main difference between mutual fund and PMS. So, there would be a unique and customized portfolio for clients, and also based on their risk appetite. So, like based on the risk score they get while onboarding, like that is the score, and the fund manager and the strategy team will closely look at that number, and they'll set up and manage the portfolio of that of those respective clients. So transparency, like it's actually like each and every day, like you can view your mutual fund holdings. Whereas even in PMS, you can do that. In PMS, you'll get a fully detailed report, at the beginning of the every month for the statement of last month. But also in mutual funds, like both are actually under your PAN. So all will get reflected in your NSTL and CDSL depositories. And if a client also wants to know what is happening on a daily basis, even in a PMS, they can actually go into that NSDL Speedy app and they can view their portfolio there. So both are regulated by SEBI. And one more main difference is on the deployment strategy. So let's say like an investor is investing 50 lakhs in a mutual fund. Like, in mutual funds at the end of the closing 3:30, like almost 90% of the 50 lakhs would have been deployed because MF are not supposed to carry more than 10% cash in their portfolio. So since already they have a model portfolio, like the 50 lakhs capital would have been split across, the portfolio, the stock weightage on that particular mutual fund. Whereas let's say a client is investing 50 lakhs in PMS, all that 50 lakhs won't be deployed in one day. Since 50 lakhs is a very big amount, and based on the client's risk score, like they would be deployed actually. And generally, it would take at least 3 to 6 months, and it mainly depends on market conditions. If like there will be days where very steep correction happens. On those days, the deployment pace will actually increase. So the pros of we now we'll just get into the pros and cons of the mutual funds and PMS. So the main advantage is like the low entry barrier. That is, you can start your mutual fund journey with any amount you want. You can even start slow. So if you're just want to, if you're a new guy who don't have any investment experience, generally, like you're just trying to test the waters and you'd like to, start small, then mutual fund would be the perfect investment avenue for you. And also, like in mutual funds, like you can take exposure to different mutual funds. Let's say, like, in mutual fund, the main core idea of mutual fund itself is, like you have around 50 to 100 stocks inside that portfolio, and even if 2 3 stocks fail, balanced stocks will perform. Just like that, even in mutual funds you can have exposure to a lot of mutual funds. You can have one large cap mutual fund combined with one flexi cap, and you can combine that with gold and silver mutual fund. You can combine that with another thematic mutual fund. So like, since the entry barrier is low, like you can take exposure to a different set of mutual funds with different categories. Whereas in PMS, if you want to do that, like generally, you would need another 50 lakhs to start another PMS fund itself. So that's one main thing with the mutual fund has an edge over PMS. And the main whenever what whoever speaks about mutual funds and PMS, the main thing they speak is about tax and how mutual fund has the tax efficiency. So the one main thing is like uh, you know uh, like when you invest in a mutual fund over a period of time, definitely there will be changes inside the stocks portfolio inside that about in that particular fund, and the fund manager will change the stocks accordingly based on the company's fundamentals and market movements and market context. So, like generally, mutual funds, you're supposed to pay tax when you're just selling that fund, when you're going to exit. But inside the mutual fund, the fund manager will actually be buying stocks and selling stocks. So they're not supposed to pay tax. But whereas in PMS, the mutual in PMS, like even when a fund manager changes stocks or sells inside the PMS, the client has to pay tax for that in that financial year. And it's like mutual fund, like you can redeem it whenever you want, and there's flexibility. Even in PMS, you can do that. But like since like 50 lakhs is a big amount, and also you need to make sure that like when you're going to withdraw some amount, you need to maintain that minimum balance of 50 lakhs so that you stay invested in that PMS fund. So, what are the disadvantages of mutual funds? So, there will be limited control over holdings. So, few days back, you would have seen, I mean, few months back, you would have seen that uh, like the AMFI and SEBI actually imposed stress tests, right, for small cap funds. Some funds had 50 day, 60 days. So, it means that Like if you want to, in those funds, even if you book redemption today, it means that you will get the your money after 50 to 60 days, because like in some funds, they would have invested in liquid stocks, and they won't be able to like sell all the portfolio in one, all the stocks in one go. There won't be enough liquidity, and to get the money back and to invest for all the investors. And one of the main things is it can underperform benchmarks. So each and every fund, as you all know, have its own benchmark. And the main thing of that active mutual fund is to, you know, and that fund manager is to beat that particular benchmark. And as you all know, there are some front running chances, since mutual funds and some major fund houses have a very high AUM. There's high chance that like there's front running might be possible, and it has happened. So, what are the advantages of PMS? So, as I was saying, like there will be like a customized approach based on your profile, and there will be a flexibility strategy. So, as I was saying, you can even sit in cash. The fund manager can sit in cash. The deployment strategy will actually differ for each and every client, and if you choose the right fund manager, there is a high edge that you get good higher returns. The disadvantages are there is like a certain base ticket size which is higher for like most of the people, and there is actually generally a higher fees. So most of the PMS fund houses in India charge about 2% to 2.5%, and like some funds also have performance fees as well. That is, they'll like it's actually called a hurdle rate. So let's say a fund actually performs around 20% or 25%. Like so, there will be a mandate that if it performs about above 10%, like 20% on that extra 10% will be charged as performance fees. It's like this. And like it's less liquid compared to mutual fund. So like main thing is like when you want to withdraw funds from PMS, you need to make sure that that minimum 50 lakhs is actually maintained. And performance depends on the fund manager. So what would be suitable for you? So like as I mentioned, like if mutual fund would be very much suitable for people who are beginners who are starting their investment journey. So any day, mutual fund is better when you're trying to manage your own portfolio. When you're starting your investment journey, or people who are starting, who would have suffered losses in this managed portfolio. I mean, who are trying to like maintain their own portfolio. They would have suffered some losses, and to recover that loss, they would start their journey in futures and options. So that is definitely a way to disaster. And when compared to that, mutual fund is any day suitable. So, like mutual fund would generally be so as I said, like mutual fund was created for people who at that time mostly people were stuck on to traditional finance like FDs, uh, like gold chits, RDs. So for them to get that extra 3-4%, generally the government actually started this concept, but now mutual fund has entirely changed its concept. Like there are some mutual funds who try to overcomplicate things, who actually do a lot of trading inside the mutual fund portfolio, and like they even invest in like micro cap, like which these things are not very much necessary actually. So like if you are looking for a very like simple investment journey, mutual fund would be very much ideal. PMS is, as I said, actually suitable for high net worth individuals, and like people who want their own portfolio to be managed by a professional, and people who are also willing to take that extra level of risk, who can uh, bear that maybe 20-25% drawdown when market corrections. And also people who are already managing their mutual fund portfolio over a period of time. And like as I said, like they might have would have got some bonus, or they would have sold some property and they want to invest that amount in equity. So for them, that kind of an investment choice would be ideal. So regulatory framework, as I said, both are governed by SEBI, and there is strict disclosure norms. So like uh, in mutual funds, like the whatever the amount you are paying directly goes to the fund house, and like your units are audited, and it would reflect in your depositories and your CAM statement. And likewise, it's the same for PMS, but PMS has some more complicated strict norms. Oh, now just let's look at some like kind of common questions, kind of a case study situation. So let's say a client who has more than 50 lakhs to invest, but for some people, investing, even if they have 50 lakhs, it wouldn't be ideal for them to invest in PMS and rather go with mutual funds. So for what kind of investors would that be suitable? So like mostly, even if a client has more than 50 lakhs and who is at the stage of retirement, then generally they would be advised to go with mutual funds, because like even though if it's more than 50 lakhs or 50 lakhs, like generally locking that whole capital in a single fund is actually not that wise. And like since they're at the time of retirement, they wouldn't be getting fresh cash flows to scale up that portfolio. So they might even want often they might want some investment returns and income from the investment, this 50 lakhs they're making. So they might even want to get an SWP kind of income. So for them, it's better to stick with mutual fund. And as I said, people who can't scale up, and mainly people who just want to beat inflation returns, who just want to preserve their wealth. For them, like plainly, sticking on to mutual fund would be wise. So what is common for both PMS and mutual fund investment is like you need to both are at the end of the day, both are are equity investments. Like both the fund managers are investing in equity stocks, and equity generally you need to give a time horizon of at least 5 years. So giving that time period and having the patience, that's the main thing. And also, main thing, as I said in the start, choosing the right fund manager. So, like, it's not like you need to either go with mutual fund and PMS, either one of the thing. It's mainly choosing the right fund manager. It's a very nuanced subject. So, you need to choose the right fund manager and the right fund, and you need to trust them, and you need to give them time, and so that you can see the performance happening in the portfolio. So this is one basic like common questions we get from even our mutual fund clients, M2W clients. So can an M2W client move to PMS once he reaches 50 lakhs? So it depends actually. So generally, like if you have that mutual fund portfolio of 50 lakhs with us and you want to go to PMS now, like now you need to liquidate all your mutual fund holdings, and for that you need to pay taxes. And in mutual funds, as you all know, like generally we follow a multi-asset approach. Like we invest in equity funds, we invest in debt funds, we invest in gold, silver ETFs, gold mining funds, and so on. And yes, even in PMS, we have a separate same kind of a strategy, which is fear. But still, like in PMS, like I said, once the transition is happening, you need to pay tax. So out of the 50 lakhs, you need to know how much you're going to pay for tax, and you're going to lock that amount in a single fund. So like the transition needs to be smooth, but in this case, it wouldn't be that smooth. So it's better that you can shift your mutual fund investment, the M2W investment, to PMS once maybe you at least reach 75 lakhs or 1 crore. So that like once you do that, you can have that 50 lakhs, and the balance amount you can actually stay invested in M2W, so that like you can pair this strategy. Like this transition would also be smooth, and like let's say you have a core like a multi-cap strategy or a small cap strategy, and you can pair it with a mutual fund where we can also have exposure to gold, silver, banking and all. So that would be suitable. So now like we can get into the Q&A session, so you can ask your questions. So okay, there are a couple like there are the questions. I'll just address them one by one. So what is the ease of entry and exit in PMS versus mutual funds? So like as I said, like mutual funds is more like easier both for entry and exit. Like you even if you test the even if you want to test the waters, you can start small, and if you're not that confident on that fund or fund managers, you can just withdraw it at any point of time. Yes, both mutual funds and PMS has a exit load, and in mutual funds generally it would be around 1 year, and in some funds it would be 3 years. But in mutual funds, sorry, but in PMS, generally most of the funds also have exit load for 3 years. It's just like they've cautiously implemented so that investors want to, investors come with the mindset of staying invested for 3 years at least. So that's one main thing. In terms of investor protection, which is safe. So like investor protection, both are, you know, like regulated by SEBI. So there have been instances where even in mutual funds, like investors were not that much protected. Like in one thing which happened in 2020 in a debt fund. So like you need to be very cautious, and you need to take that calculative risk, and accordingly one main thing is your asset allocation. So you need to prioritize. So like PMS, as I said, it's like a luxury. Mutual fund is a necessity. So like you need to make sure that all your base is set before starting your PMS. So that is one main thing. For NREs, which is more convenient and tax efficient? So for NREs, there are specific PMS. So generally, like even we have a specific NRE product called Neo, which is like similar to what we do in the multi-asset strategy in Sphere, except that it won't have mutual funds or ETFs. So what is net asset value? So NAV is net asset value. So NAV is generally like in mutual fund, they start the fund with an NAV, just like how when a share, when in an IPO, when a share gets listed, their face value would be 1 rupee, 5 rupee, or 10 rupee, and on that price alone, like based on the market sentiment, it will actually go up or go down. It's just like that. NAV during the NFO period, NAV said generally be around 5 or 10. And accordingly on the funds, stocks fundamental, it will go up or go down. And from there, it will catch up and it will continue for a very long period of time. Beat benchmark, we can choose alpha index mutual fund trade. So yes, sir. So generally, like even if you see in the last 5 year period, there are some mutual funds who would have performed more than some of the best PMS. So like depends on it. The alpha generated mainly depends on the fund manager. If one receives 50 while retirement is PMS right choice, sir. Sir, as I said, like generally, if you're like, if you have some other passive investments, if you can also, invest at 50 lakhs, and also with those passive investment, if you're ready to, if you'd be okay to, take care of your basic needs, if you can run your life, then maybe also if you can scale up that portfolio during market corrections, then it would be uh, ideal to get into PMS. But if not, generally sticking on to mutual funds would be the ideal choice. Above 50 lakhs, how much you need to invest in PMS? Yes, it's a good question. So generally, after 50 lakhs, there is no any minimum amount. After 50 lakhs, the top ups can even be 10,000, 1 lakh, 10 lakhs, or 50 lakhs or 1 crore. So the top up amount, there's no minimum amount required. That minimum ticket size to start is required. So could you please explain your PMS offerings and types? So we have actually five PMS products. So the main flagship product, the first PMS we launched was Solitaire in 2019, which is a multi-cap strategy. So here, like we can invest in small cap, mid cap, large caps, and even micro caps. The main thing is like we generally invest in debt-free companies. So generally, 80% of the portfolio would be invested in debt-free companies. So like since banks follow their main business model follows on leverage, operates on leverage. Like whatever amount they get on deposits, they lend it out as loans. So generally, we avoid investing in banking stocks. So that is one main point thing you need to note. The second PMS is True Blue, which out and out is a large cap PMS. So out of the Nifty 50 stocks, whatever stocks we feel are at good valuation, we pick those stocks and we create the portfolio. And the third one is Vriddhi, which is the pure small cap PMS. Here, like we would be investing in market cap of between 5 crores to 10,000 crores, maximum. And investors who have that very high risk appetite, and like investors who already have exposure to good exposure to large caps, who they can actually get into this PMS. And the final one is Sphere. So the earlier three I was talking, it's mainly corely on out and out equity. Here we can not only invest in equities, we can also invest in mutual funds, bonds, precious metals, ETFs, and so on. So the main thing is some people would not be that comfortable to invest that whole 50 lakhs in single asset class, which is equity. So for them, for very good diversification, like we actually they can actually look to invest in Sphere, which is the multi-asset. And also, when in the last 2 years, almost gold has outperformed each and every equity fund. So this fund has actually given a double-digit positive return in the last 1 year. So like people who are who prioritize asset allocation, uh, it would be a good idea to get into Sphere. And the last one is Neo. So Neo is exclusively for NRIs. So it's the same principle like Sphere, but the only thing is we generally avoid investing in ETFs. My total corpus is 80 lakhs. Is it recommended to invest in MF for PMS? Please advise, no other investment. So if you have never invested in equities or you have zero experience in equities, generally it's better to start your journey with mutual fund. Stay invested in at least 3 years to 5 year period. Once you get that experience and once you can ride that volatility, once you know how market cycle works, then you can get into PMS. Or if you've already invested in stocks, then if you have some good cash flows coming, if you have some 10-15 years in your work career, then PMS would be recommended. What is the taxation for PMS? So it's the same, sir, actually. So what differs is like whatever stocks they're selling, the fund manager generally, like the idea would be to have like it's a most of the good PMS funds follow a buy and hold strategy. So be it solitaire or like with the sphere, generally whatever like stocks we are planning to buy, like we try to hold it for the next 5 to 10 year period, so that there will be a less churn in the portfolio. Or if the fund manager in the PMS is actually kind of doing a trading thing, or buys a stock, sells it within a very few months, then most of the clients would incur short-term capital gains tax, and it would actually impact the returns, and it would like increase their investment, like sorry, the cost, the tax, but like it's the same actually. So if it's less than 1 year, it's 20%, and if it's more than 1 year, it's 12.5%. As a customer, how to select which PMS provider is good? Is there assured returns from PMS? How often will the PMS be withdrawn from PMS, or it will be reinvested? So as I said, like you need to see which PMS product would be ideal for user. So like it depends on your risk profile. It depends on your like your age, and like the investment return you would like to generate and everything. And is there assured return from PMS? Like there is generally like no assured returns in any kind of an equity product. Like generally it's believed that since Nifty has given in the past 30 years for around 11-12%, it's believed that it can generate over that kind of a return. But generally there's no any guarantee that everything will give a fixed return. You can expect the funds to beat the index, the Nifty index or NSE 500 index, if in a 5 year period of time. How often the profit will be withdrawn from PMS, or it will be reinvestment? Yes, reinvestment will be it's possible, but it's not very often, because if we reinvest from exiting a stock, then there will be higher churn. Generally we avoid churn in the portfolio. In PMS, if the amount goes below 50 lakhs, whether we have to top up and maintain the limit. So, like, people who have invested in the last 3-4 months, generally their portfolio would be below 50 lakhs, even in our PMS funds. So, no, sir. So, if like the current value goes down because of market performance, generally it's not required to top up and maintain that 50 lakhs level. Any other questions you would like to ask? How often an investor have to put additional sum other than the initial 50 lakhs? Good question. So generally, like as I said, mutual fund try to the main advantage mutual fund has over PMS is the taxation part, and PMS good fund house, good PMS fund manager tries to avoid that part. So the main thing, the only thing he can do is like he can buy and hold, so that 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 stock actually compounds, generates good returns over a period of time, so that they never sell that stock, so that taxation is reduced and there is also a low churn in the portfolio. So like the 50 lakhs the client which they give, they try to fit the right stocks, and they try to hold that for as much as period possible. So but will that be enough? Because moving forward, after 6 months or 1 year or 2 year, an investment opportunity will come, and that present, there will be stocks trading at a good valuation. So a fund manager wants to take exposure to that stock as well, right? So it's better that the client actually scales up. So in how often they can scale is like they can invest during market corrections, or you can, it's better that they invest at least 10% of the portfolio every year. So meaning like in the first year, like they start with 50 lakhs, right? So it's better they invest around 5 lakhs. And after 3 or 4 years, like the portfolio would be around, let's say 1 crore. And at that time, it's better if they can invest at least 5 to 10 lakhs at that point of time. Explain about PMS service charges. So So PMS actually generally have a fixed fees model, sir. So like every year, generally most of the PMS charge around 2 to 2.5% as fixed fees. So on your overall value, that is the profit plus capital. So RPMS generally charge, so except with the small cap, the sphere, the multi cap and multi cap, it's sphere and solitaire is around 1.5% fixed fees alone. Some fund houses, PMS house, charge performance fees as well. The performance fees is nothing but a fund might generate 20% return in a year. So there will be a hurdle rate called after 10%, whatever returns the fund is generating, 15% or 20% will be charged as performance fees. So let's say an investor gets around 20%. Generate around 20% returns. So after this 10%, there is 10% alpha which is generated. So in that 10%, like 15% will be charged, 20% will be charged. Here in small cap, the small cap Bridi is the only thing where fixed fees and performance fees is charged. And performance fees after 8%, whatever hurdle rate it crosses, 15% is charged. Which one is tax efficient, having less tax and charges? So as I said, like mutual fund, the churn inside the portfolio, the stocks replacement of the stocks changing, which is done by the fund manager, there is no taxation. Whereas in PMS, if there is any changes in the stocks inside the portfolio, the client has to pay the tax for it on that financial year. So plainly, uh, mutual fund is tax efficient, and less charges is there in mutual fund part side. Yes, it's accepted. But actually, you know, like when in a right good PMS fund, the fund manager knows this disadvantages, and they try to keep the churn inside the portfolio as low as possible. Is NRE from capital gain tax in mutual fund? So, like, there was an article that stated that recently that NREs are exempted from tax in mutual funds if they are residing outside India. Yes, it can be done. I am not sure on that, but I'll just check and get back to you. If you can, since you've registered for the webinar, I'll be having your number. I'll just check and I'll get back to you on that. Each investor is required to put the same amount or according to individual's ability. So in mutual funds, it differs. So people can start with 1,000 or people can start with 10,000 or 1 lakh or 10 lakh. And in PMS, everyone is supposed to start with 50 lakhs. If people who are, okay to start, start with a double PMS or even start with 1 crore or 2 crore, yes, they can go ahead. It's on individual's ability. Okay, so sorry, I'm asking about the top up amount in PMS. Okay, so top up amount, yes, it's completely based on the investor's ability. So people like who can scale up, who have that, like uh, who are ready to take that extra level of risk, they can even scale up 100%. Generally, we advise to scale them up at 100% is once in 5 years during COVID lows or market situation like this. But apart from that, what we ask is 10 to 15% of the portfolio every year. But it completely depends on the investor. They can exceed this 20 to 15% if they're interested. Yes, they can do so. Good question. What about dividend from PMS stocks? Yes, sir. So all the investors will be getting dividend from the stocks they're owning in PMS, and yes, they will be like credited to the investor, and it will get reinvested back into the PMS. So during the recent correction, how much drawdown happened in your PMS? So Solitaire is about 12%, Vriddhi is about minus 20%, and True Blue is around 1%, and in Sphere it's actually plus 10%. Okay, so we'll just give a few more minutes. If there is no questions, we can close. Yeah, thank you. Yeah, thank you. Thank you. Thank you. Thank you, sir. Yeah, thank you all for joining and have a good weekend. Thank you. Bye.